Hello, everyone. It's Jeremy Osterberger with BIC Magazine. Joining us today is Ben Cowart, Vertex Energy President and CEO, and Brandon Deitz, Director of Communications. Ben and Brandon, thank you so much for giving us some of your time. How are we doing?
Yeah, we're doing good. Thanks for having us, Jeremy. Good to be here.
Awesome. So, Ben, man, it's been about 3 years since we jumped on together. And that time, Houston-based Vertex Energy was purchasing Shell Oil's refinery in Mobile, Alabama. And you had retained 200 employees strong and really making that site Vertex's flagship refinery, producing renewable diesel from waste products. So, Ben, tell us what's new. There's some news in the past week. Talk about your big pivot and what's happening right now at the site.
Yeah, thank you. Yeah, it's been an interesting journey. Buying the refinery was a monumental step for the company, and we've really worked hard to bring that new asset into the company and get it, settled in. We took on a big project as soon as we closed to convert part of the plant to produce renewable diesel from waste, fats and organic oils like soybean oil or canola oil. That made that challenge that much more to stand up a brand new renewable business inside the company and on that site. So, team's really done an amazing job to accomplish all the work and execute really well operationally and commercially with that endeavor. So, unfortunately, we've met some headwinds with the current renewable market, the renewable volume obligations that the EPA sets for the mandate to blend renewables into carbon fuels. They basically would ratchet that on an annual basis, and they decided, this past summer that we would just lock in the current requirements and carry that through 2025. So the new renewable volume obligations are scheduled to be set in 2020, for the year 2026. So when that happened, there was a lot of companies like Vertex that was really working to bring in new renewable production, with the idea that there would be a bigger market for that product. So it is what it is. We came in, we delivered really well. We got a great product, great production, all of that good. When you have more production in that market, then you have demand. We get a RINs credit for making the fuel, and if the RINs is not used to offset obligations, then it's sold at a lower and lower price. And that's really what happened. Our revenue from the RINs has kind of fallen off the table. And, that's okay. This business has renewable transition cycles. Brandon will talk about that in a minute. But, for us, we went into this space to solve that problem. And if it's not a problem so much today, we think it will be in the future. The asset was built to pivot. So we decided that this may take a little while before the market, can really need and appreciate the asset and what it can do. So we have the fortunate capability to pivot that asset back over to carbon for the time being and really focus on, making money and making fuel. There is a lean refining capacity right now for even carbon fuel. So we're fortunate to be able to pivot back, make our carbon fuels and continue solving good problems with the purchase of the refinery. So the refinery has been really good, to the local market and to the Gulf Coast. We lost two big refineries in the Gulf, the Convent refinery and the Alliance refinery. So, I think there's a good job for us to do long term.
Ben, and I'm going to stick with you for on this. Yeah, what are some of the things that have allowed you to have so much flexibility and be able to pivot?
Yeah, first of all, this hydrocracking plant was built downstream of the crude refinery that was originally built by LL&E. So Shell did a really good job to build this hydrocracker system in order to make a heavy olefin feed for their chemical business at Shell Norco. So it made our job easy in that the asset was very robust. We were able to come in, make modifications. It took us about a year from breaking ground to mechanical completion, and that was the first year of owning the site. So taking the site in, get everything working, get this built. That gave us the leg up to make the conversion, and it also had a life of processing VGO prior, so we've just been able to go right back to that same work.
No, thanks, Ben. That's a great explanation. I appreciate it. But Brandon, I'm going to flip to you. We mentioned this renewable identification numbers or RINs, but Brandon, would you dig a little more into, just for folks that may not know, can you give us a brief overview of what and how RINs work and why do they play into this decision away from renewables? Ben touched on it a little bit, but I just wanted to dig in that a little bit more.
Yeah, I mean, when they set those renewable volume obligations, there are RINs credits that you can then apply to that. And as Ben mentioned, when you get a situation where there's an oversupply of, in this case, renewable diesel, you're generating a lot more RINs on those volume obligations demand. And so that reduces that. And those RINs are sort of counted in that stack. When you think of margin, profitability from renewable diesel, when that shrinks and you're compressing those margins, you also have, it's a multi-lever kind of scenario where you've got the price of feedstock, which may be coming up, and you've got these RINs prices, which are going down. So it's sort of getting compressed on both ends. You have the price of diesel as the finished product. So you're sort of watching all of these things move, and you have to watch them sort of act in concert together when you're making these decisions and when you're trying to forecast where to go with that business.
And Brandon, I guess I'll stick with you. Right. So I guess my next question is, so what does the timeline look like to pivot back to carbon or traditional fossil fuels as feedstock?
Yeah, we have, what we stated is that we're looking at, finishing out our renewable diesel feedstock here in the second quarter. And, so we're running through our existing Vertex owned supply of renewable diesel. And, we hope to get through the conversion process and have this thing on stream contributing by the fourth quarter. So there's other pieces that go into this, in addition to the turnaround, which involves, some, minor reconfiguration and a catalyst swap, that surrounds, air permitting and things like that we have to get out of the way as well. So we can't definitively speak to those timelines, but, we're targeting, by Q4 to have it on stream.
Okay, gotcha. Because you got to get that timeline, you got to get that turnaround in place and contractors in place. Is that all? That's all happening now, or?
Well, and the turnaround was pre-planned. So this is one of those things that, when you look at the capabilities for us to be able to pivot one way or another, we are able to sort of time that with, okay, we were due to do a catalyst swap anyway. We see things looking the way they are. We don't see anything that indicates a material change in the other direction relative to, things changing from where they've been over the past year for renewable diesel. And so the team, and I'll let Ben clarify as needed, had to make that choice of, as we get into this turnaround, do we put in the catalyst that continues to produce renewable diesel, or do we look at converting this thing back to conventional with this catalyst swap and, pursuing margins that we feel like better reflect the value potential of that asset?
That makes sense. Ben, any other comment on what Brandon said?
No, he had it really good. Lot to try to digest, but the asset has that interchange flexibility that was built in by our engineering group, and the catalyst changes the window to do that. So that's really what you're seeing in our announcement at our earnings call.
Makes sense. Brandon, I'm going to go back to you on this. Can you expand a little bit on Vertex's philosophy on kind of the ebb and flow of the renewable transition? I mean, how the company doesn't necessarily look at renewable as linear or one-way path. I just want to dig into that more. I think most people are like trying to understand this move and how it can pivot so quick.
Yeah, so I wouldn't say that we necessarily went into it with this philosophy, but as you learn from these experiences, because everybody was certainly optimistic about where renewable diesel was headed at the time, and we remain optimistic about where renewable fuels will be in the future. But you look back at the energy transition as a whole, and you kind of recognize that, rather than thinking about it as this sort of, straight line continuous, spectrum, you're really dealing with something that is, Ben and I will talk about it. We'll call it energy transition cycles or even sprint cycles, to where instead of having this path, you might have this, or it's kind of moving a little bit. So what happens is you get, an emerging energy source that, whether because of new information, new technology, or, some redeployment of technology for a new use, combined with geopolitical interests and events, they're suddenly spotlighting, this new potential for this energy source to either generate energy security or lower carbon footprint. And so you get a lot of optimism, a lot of support, a lot of growth and drive towards that initiative. And then you're dealing with things like, adoption rates and sentiment and supply chain logistics, and the market's going to react to it, and then it's going to kind of settle out. And so you can kind of look back and see that, in 2006, maybe 2005 to 2007, the interest in biofuels, or even re-refined base oils, and, some of this push towards green, where there's a lot of excitement. And then, it meets some of those challenges and things kind of level out. And so when you consider that, it really stresses the importance of a company, and especially a company like Vertex, to be nimble and flexible in these moments, to be able to navigate those energy transition cycles, to work with the ebb and flow, to be able to produce and to do what I think we've done, which is to prove our capabilities in the renewable space. But also, we like to say that look, the energy, I guess the path to sustainability has to be sustainable. And that, sort of requires us to be able to shift gears, preserve our ability to go into renewables in the future, and protect that capability, as we want to contribute that over the long term.
Wow. Thanks, Brandon and Ben, for both telling us kind of where you're at. Let's move to the future. Look, the underlying story is that in either case, conventional or renewable, Vertex has opportunities to expand. Ben, I'll go to you. Can you share what possible expansions may or could occur here in the future?
Yeah, well, hey, taking on a whole renewable business from ground up and doing that in the short amount of time has been a major development and undertaking by the company. So our guys are actually breathing a little easy now, because we're able to pivot back, kind of settle back into something that we've done for a long time. The site's actually, run this hydrocracker for over 20 years. So it's a breather, if you will. We are excited, as Brandon said, about the future. So, this asset is our most valuable asset for the site. And we have lots of different ways to monetize that investment over time. Some of those ways are furthering our renewable footprint into things like sustainable aviation fuel. So that's a opportunity that now we have some time to spend, thinking about and doing some planning and investing, about the highest and best use for the asset. There's other opportunities on the carbon side of the business that, higher fuel conversion. We're going to have more hydrogen on site. So there's several other leg ups, when we think about growth and expansion. Our feedstock development, our feed origination, which is a vertical in our business. We're really have time now to focus on that as well. So we, I wouldn't say we're going to dive off into anything new at the moment. I think we're going to, pull back, recalibrate, focus on, maximizing our returns with the assets that we got, and really stay in a watchful mode, looking at the markets, looking at kind of the horizon and where the needs are and where we can best solve the biggest problems.
That's well said. Brandon, any other comments on sort of the future and anything to add to what Ben just said?
I would echo what he said. We have, our 20 plus year history, which began in used motor oil, re-refining logistics. One of the things that's been really exciting that hasn't gotten as much attention has just been our ability to take and create synergy and really optimize those assets across the Gulf Coast to get better use out of all of them across the board. And so I look at it and I'm excited for the company to be able to continue refining that network. As Ben talked about, feed origination, which is part of kind of how we talk about our fleet of trucks out there collecting used motor oil, processing that in the VGO at a Marrero facility, and then having opportunities to market low sulfur marine fuels from that in the Mobile area. So there's this thread that connects all of those pieces there. And it's a great opportunity to really, continue working on what I would call those sustainability type operations, which I think nicely complement the conventional service that we're providing out of the Mobile asset today.
Last question, guys. Look, investment matters. What are your investors saying about the decision? And I guess I'll leave it at that. Ben or Brandon, take that question, whoever wants it.
Yep. Brandon leads and kind of oversees our investor relations, so I'm going to let him take a shot at that. But I think all good as we see it. Not speaking for them, but we've done good with this decision. So.
Yeah, the shareholders are immensely important in this process, and we recognize that, a lot of them have been along with us on this journey from the beginning, some even since before the acquisition. So they've weathered the storm, as it were. Based on what we hear, there's a lot of understanding in terms of the rationale for why we're doing what we're doing, and we appreciate that. What we hope they hear is that this, and what they see is that the decision was one that was thoughtful. It was given careful consideration with our shareholders in mind to kind of stop the losses associated with renewable diesel production and optimize towards opportunities that once again best reflect the value potential of that asset.
Guys, it makes sense. It's a great story, an amazing story. We just thank you so much for allowing Vic to be a part of it and tell the story. And we're just grateful for you, Ben, and Brandon for your time. And you're welcome back anytime you guys want to come on. I appreciate the update on Vertex Energy.
Thank you, Brandon. Jeremy, really appreciate your work you're doing in the industry. So thank you very much.
Thank you so much. And as always, folks who are listening and watching, we're so grateful for our audience. Please like and share this recording with colleagues. And for more industry news, videos, webinars, and podcasts, visit bicmagazine.com. Remember, it's what we do together that counts.